Hello everyone. Welcome back to another video. Today, we're diving into the world of FVG, fair value gap. To boost our knowledge, we'll take a look at the strongest and weakest forms of FVG to understand how they work. Plus, I'll share 2 killer strategies that can be implemented in trading scenarios. So, stick around, and let's get into it together. You probably all know about FVG and are fairly familiar with it. I made a video about it earlier, which you should definitely check out. The fair value gap is one of the most powerful concepts in trading. Trading without the skill to identify proper and high-quality fair value gaps can be extremely risky. To begin, we first need to discuss what a fair value gap actually is. We can have bullish fair value gaps and bearish fair value gaps. You first need to identify a 3-candle sequence, then look for a large candle between 2 smaller candles where the high of the first candle and the low of the third candle do not overlap with the middle candle. The gap between the high of the first candle and the low of the third candle is called the fair value gap. If you look at your chart, you will see these gaps everywhere. Oftentimes, price will come back down to this zone, fill the imbalance, and retrace back up to test the highs again, which we can use to our advantage and profit off this move. In this video, I covered 6 common types of FVG. There's a high chance that the price will quickly reach 50% of Type 1 FVG, but as we get closer to Type 6, that likelihood decreases. Usually, in Type 6, the price doesn't return to this FVG unless it attracts liquidity, and that's what we call a breakaway gap. FVG zones are a good entry point into the market, but here's the deal: if the third candle can't break above the second candle, we probably won't have a solid level to jump in. That's when things can get tricky and the FVG zone might fail. So, we just talked about one of the weakest setups in the fair value gap. But now let's dive into the strongest scenario. When an FVG has an overlapping with a block, like a breaker block or a mitigation block, it opens up some amazing opportunities. You can really count on a solid swing move in this case. Well, let's check the strategy based on this setup. When we have a FVG zone and there's a candle with a long shadow behind this zone, that push the price up or, conversely, down. This area becomes very important for price reversals. This price reversal can continue all the way to the support area, which is actually the take profit zone. By observing the confirmation candle, we can make a good trade with a take profit target of 2. Let me show you an example on the chart. I use this strategy on the 1-minute time frame, but you can backtest it on any time frame, it doesn't matter. When the strategy is solid, it works everywhere. Alright, let's move on to the second FVG strategy. Imagine we had a downward trend. The first leg that changes the trend and begins to rise is where we identify the first FVG that forms. As the trend continues, when an equal high forms and the market fails to make a higher high, a drop occurs. The price then retraces to the FVG area. You place a buy order in the middle of the FVG area, set your stop loss below the FVG zone, and target the take profit level at the equal high area. I hope this video has been useful to you. If it has, please click the like and subscribe buttons to help us continue producing more videos like this.